Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, dubious speculation. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. Now, in this video, I just want to comment on Bitcoin's price action, look at it with respect to interest rates, look at it with respect to gold, look at it maybe through the lens of Bitcoin dominance, a few other things. So we're going to go through various aspects of it, so please bear with me. The first thing I wanted to take a look at are interest rates and how that has related to Bitcoin price action this year. Now, this line here, let me change this to a different color so it shows up a little bit better. So the white line that you see on the screen are interest rates, the federal funds rate. And we've spent a lot of time talking about this year. Now, unfortunately for Bitcoin, it hasn't really lived through many rate hiking cycles. In fact, you could argue that this is only the second rate hiking cycle that Bitcoin has ever experienced because it just hasn't been around long enough to know anything else. I mean, we are effectively at 0.25% for the Fed funds rate for most of Bitcoin's life over here. We finally saw a rate hiking cycle, and then we saw rate cuts, and then this is our second cycle. But one of the things that we've been following this year is the Fed funds rate and talking about expectations for the terminal rate and when the Federal Reserve could start cutting rates. Now, I was quite vocal a long time ago that the federal funds rate, the terminal rate, would likely be 5.5%. And we've been at 5.5% for a while now, and I think that this is the terminal rate. I don't think they will go any higher than this in the current cycle. That doesn't mean that next cycle they can't go higher, but in the current cycle, I do think 5.5% is the terminal rate. Now, the reason why this is interesting, again, is in just looking at the last cycle, a reminder, it's just n equals 1, right? We have one data point. Just because it played out in a certain way in a prior cycle does not mean it has to play out in the same way in the current cycle. We're just going to look at some of the similarities, and of course you can make your own decisions. One of the things we pointed out before is that Bitcoin's local high was in. Again, it wasn't a major high, and it's not like even after this 2019 high, we didn't even go put in a new low. But this high came before the Fed started to cut rates. Okay, so that is, and we've talked about this for probably well over a year now. If we draw a line at the first rate cut that came in July of 2019, you can see that the Bitcoin actually topped out just before the first rate cut. Okay, just before it, about 1 month before it. Now, it's anyone's guess as to when the first rate cut's going to come. Some people say the Fed will start cutting in January. A lot of people think it'll be in March. Of course, a lot of that will depend on how the labor market evolves between now and then. If you were to go look at probabilities for rate cuts, the market is fairly convinced that there's going to be a rate cut by March. In fact, only about a 12% chance that will still be at 5.5%. You can see that there's about a 75.6% chance that will be at 5.25% by March. And there's even a 12% chance, according to the markets, that will actually be back down to 5%. So the market thinks that rate cuts are coming in March. And some market participants think they're coming as early as January. So if we were to first start off with the idea of March, then that would effectively be, so if we were to draw that line on the screen looking at March of 2024, and let me go figure out the exact date, so March 20th. So if we were to draw a line here, all right, let's just draw it on March 18th because that's the start of that week. That puts it right there, okay? Now remember, Bitcoin, at least last cycle, found a local high before a substantial cool-off period just before the Fed started to cut rates about a month before. Now, this 75% chance, really more than that, like 87% chance, 87, 88% chance of a rate cut by March. If it were to play out last cycle, then that means there could be a local high for Bitcoin coming in early part of Q1 2024 if it doesn't come before then. Now, how would that, are there other things that we can look at that paint a similar picture or not, right? And I think that's something that's worthwhile to discuss. And one of those things that is kind of an eerie similarity is that if you look in 2019, just before the final push to the upside, right? So like just before the final 3 weeks that Bitcoin made this move, we had a red candle. But then after that red candle, after this red candle in June of 2019, the following candle was an engulfing weekly candle, meaning it opened, it opened and then closed that week above where the prior week opened, despite it being a red candle, right? So red candle down, an engulfing candle the following week. What's fascinating is from this low here in December of 2018 to this high right here at around this wick, it's hard to get it exact right, but I mean, it's about 189% rally. And, just for the sake of trying to make this as accurate as possible, let's just line this up. So around about 189% move before we got the red week, from which we had an engulfing candle the following week that led us into the final move before rate cuts began. Okay, right, we can see that pretty clearly. About 189% rally, red candle, engulfing candle the following week, final move before rate cuts began. Now then, if you go back, if you look at it like this cycle, right, from this low here to the current wick high, about 188, 189% move, right? So it's a really similar type of move. The main difference, though, is that this move over here took place over the span of about 6 months, whereas this move took place over the span of about 12 months, right? 12 to 13 months. So I guess about 12 months. So you're talking about from November, because that wick has already come and gone, right? But about 12 to 13 months. So while it's up about the same amount, this move took about twice as long as that one, okay? Now, one of the things we mentioned is that in this move, we had an engulfing candle, right? So you had the red candle and then you had your green candle the following week. And we're actually potentially looking at a very similar thing here, right? Where you have a candle down and then you have a potentially engulfing candle the following week. Now, let me switch this over to a different exchange because it's not really showing up that well there because it's showing the opening price is higher than the closing from the previous week. But you can kind of see it, right? So what I think you look for is, does this week close above where the prior week opened at? And we're currently right around that price, right? Right around 43.8K. You can see the following week, the previous week opened up at around 43.8K. So again, the question will be is, can it get that engulfing candle or not? Okay. And if it does get it, which again, there's no guarantee, we still have, a little bit of time before we get the weekly close. But if it does get that engulfing candle where it completely wipes away the losses from the prior week, and then we get a following move in sort of next week, so the last week of December, then it would be setting up a very similar type of move that we saw back in late or in mid 2019, just before the first rate cut came in. Okay? Right? So I think that is something to think about, right? Is will it play out in a similar manner or will it not? The other thing that I mentioned before is you can look at this also in other ways besides just interest rates. The other way to look at this is if you were to overlay gold onto the chart, right? So if we were to overlay gold onto the chart, one of the things you'll notice is that when Bitcoin had this move just before interest rates began, being cut, you'll see there was this prior range on gold. at which it was really struggling to break above, right? You can see it had one test right here, a couple more tests over here, unable to break above it. Here it fell short. Finally, it broke above this level that it was struggling to break above in June, right? In June. And it broke above it right here, right? Right here after this red candle by Bitcoin, right? The next week or two, that was when gold finally broke out. And when gold finally broke out, right, as it finally broke out, that is what preceded the final local high on Bitcoin before a more substantial pullback. Again, I'm not trying to say that it has to be, all doom and gloom. I'm just saying, look, this was a local high before a more substantial pullback after gold broke out, right? So we had that move by gold above this level, right above the level it had been struggling to break out from for a long time, starting in September 2017. This was June of 2019. You're talking about almost 2 years before gold finally broke out. But once it broke out, Bitcoin then entered its local top within the next week or two, right? Within the next couple of weeks, Bitcoin entered its local top, which again preceded interest rate cuts by about 1 month. Then if you go look at where it is today, you can see the gold has had a very similar structure, right? There's been this level that it's been struggling to break above, and now it seems like it's finally starting to break above it. Not that dissimilar, right, from what we saw back over here, right? So gold had a very similar move. Let me move this up now because I shifted the screen, right? But gold had a very similar move right here, right? So you had this high, this one was a little bit lower, still unable to break through it, potentially breaking through it now. Still remains to be seen, right? You still need to see gold continue to show strength and get into the 2070s, the 2080s, the 2090s, so on and so forth. So it's interesting because, it's setting up in a similar manner, though the move that it took Bitcoin to get here, while it's up about the same amount, took about twice as long as it did in the prior cycle to get to the same point. So we'll see if it plays out in a similar manner or not. Now, one thing to think about too is, well, what if interest rates don't get cut in March, right? There's always a chance that they don't get cut until May. And then that means, it could mean that there's a lot more runway. On the other hand, what happens if they get cut in January? Then that means that Bitcoin could be entering the topping process within the next week or two, if it plays out like the prior cycle. What's fascinating about this move is, I know a lot of people have been talking about the spot ETF this year, and I don't know the exact dates on when people are speculating that they're going to be approved, or at least some news come out, but I think it's around, the first, second week of January, which is interesting because after Bitcoin had this move, right, this red candle, it then had the engulfing candle the following week, and then 1-2, right? You had 2 candles after that where Bitcoin put in higher prices, and then that was it. So 2 candles after that would actually put you, so December 25th is the coming week. It puts you the week of January 1st, right? The week of January 1st would be similar to sort of this one. But the main caveat, remember, is that the entire move to get to the current point took twice as long, right? It took twice as long to get to the current point this time than it did last time. And so perhaps from this level, you could argue that maybe the next move takes twice as long as well. So instead of a 2-week move, maybe it's, a 4-week move, right? Could be. And if it's a 4-week move, that's still getting you about a month or so before potentially interest rates are getting cut in March of 2024. Now, there's always a risk that inflation reaccelerates and that all these cuts get completely priced back out, and then the bond market would then react accordingly. There's always a chance that happens. While I do think there is a risk of a second wave of inflation, I think it's a little premature to think that wave is here. And so I would argue that the more likely outcome, at least in the short term, is to see continued disinflation, primarily because one of the main reasons that inflation has been, continues to come down is because the housing market is very, very lagging, and it's finally starting to feel the effects of all these rate hikes. So I still think inflation will come down, and that there could be, there certainly could be a reason for the Fed to sort of point to to why they need to pivot or to cut rates in early 2024. And the reason they could say that is if you have inflation sort of trending towards 2%, but you have the unemployment rate potentially trending higher, then they're going to point at that and say, well, guys, we have a dual mandate. It's not only price stability, but it's maximum employment, and therefore they could start to cut rates. So I think that it's important to recognize that the cycle does not have to play out in the same way. A lot of people say this time is different, and look, I've had my fair share of wrong calls. So I just wanted to at least point this out, and this is something we've pointed out before throughout the year. I think the hard part about this sort of analysis when it relates to interest rate cuts is we don't actually know when interest rate cuts are going to come. I mean, a year ago, the market thought that interest rates were already going to be getting cut in mid 2023. Now, I was not one of those people that thought that. I mean, I thought we were going to go to 5.5%. I thought higher for longer, but now I think higher for longer has been priced in when the bond market had that pretty substantial move to the downside back in August, September, and October. So I think higher for longer has been priced in. And that was sort of the way of the market really getting to that extreme. And now it's sort of going in the other extreme and saying, well, what happens if we go into disinflation or continued disinflation, and the Fed is so far behind the curve on cutting rates that's the next narrative that gets chased. But I did just want to point this out because this was something that we saw last cycle, was sort of that final thrust. And of course, the other way to look at this is through the lens of Bitcoin dominance. And a lot of people have asked me my opinion on dominance. Normally, what happens is that sometime in the halving year, altcoins start to durably outperform Bitcoin because we go to looser monetary policy. Now, in the short term, a lot of people could say, well, dominance has come down from 55% only a few weeks ago, right? And what's interesting for me is that how quickly opinions shift on Twitter, right? Like, so a few weeks ago, it was like, oh, well, the Bitcoin dominance theory has been correct all along. And then you just fast forward 2 weeks and it's like, all right, well, no, it's not. But look, guys, dominance has been above the 20-week estimate, 21-week EMA for basically the entire year, right? It's been in an uptrend for the entire year. And I thought, it might be interesting to take a look at how this looked at around the same time during the last cycle as well. And if we were to pull up interest rates onto this chart on Bitcoin dominance, one of the interesting things that you might note is that just before rate cuts, dominance also saw a pretty substantial pullback last cycle as well. Not to the point where, if you actually look at this really closely, there were a lot of wicks to the downside here, right? So like it went all the way up to 63% and then came all the way back down to around 57%, right? So from 63 to 57. Now, the 63% move, when it hit 63%, it did it in mid-May of 2019. You can see that Bitcoin dominance then put in a new high, a new yearly high, a month later, really about 5 or 6 weeks later, right? Because this occurred the week of May 13th, and then it took out that the week of June 24th. So it was about 5 or 6 weeks later, after a fairly substantial pullback in Bitcoin dominance from 63% down to 57%. And then if you look at it today, you can see that there's been a pretty big drop from 55%. And if we go back to where this wick was, this was back at around 51%, which coincidentally happens to be where the bull market support band is going to meet it, right? So the bull market support band will come in right here. And then the question is does Bitcoin dominance bounce off of that just like it did over here? And again, I have really conflicting views if I'm being completely honest. I think the low-hanging fruit on the dominance move from 38, 39% up to 55%, that's come and gone. And you have sort of two different ways that you look at it. You look at it, well, normally Bitcoin dominance in halving years doesn't tend to do that well because of a shift to looser monetary policy, right? Normally speaking. But it's also important to point out that last cycle, dominance did not even top right here until after interest rate cuts began, right? So back in September, I had a lot of people telling me that dominance had already topped because, right, because that's when it topped last cycle, right? So like, why would it be any different this time? Why should it be? And you can see that, well, dominance continued to go up well after September. So I go back to this idea of, is it just a timing thing, or was it based on monetary policy? We know if you go look at let's just go look at the dominance chart. Here it topped in September. This cycle, you can see that it put in a new high in October and then put in another high in December. So clearly this move has been different than this move over here that topped out in September. And the reason why I think it topped out in September is because interest rate cuts had already began, right? They'd already begun, and therefore, higher risk assets started to do better against lower risk assets durably, and it wasn't just sort of a one-off move that then got faded a few months later. So I do wonder if this is sort of where dominance is, right? Where it's had this pretty massive pullback just at the same time that we are going into sort of the last couple of months before interest rate cuts began, right? So you can see that dominance had this pullback in May, starting in May of 2019, and then a month later in June, dominance was putting in another new high. This top here came the first week of December. So a month after that would put you the first week of January, which coincidentally could be when all the spot ETF hype finally comes to a crescendo, right? There's some type of resolution to this idea, and it could be the first or second week of January if it were to play out like it played out over here. Now, what's interesting about this move over here by dominance is that after it had this break back up to the upside in June, it corresponded to that final thrust by Bitcoin just before interest rate cuts began, but dominance continued to go up for another few months, right? So that maybe a couple more months or so, 2 to 3 months, dominance continued to go up even after that that major move by Bitcoin was over with and after cuts began. You can see that while the Fed started to cut in July, dominance did not top out until September. So we find ourselves in an interesting position because, there's a lot of people that think that, it'll behave the way it always does because of whatever reason. And there's other people that think it's more so based on monetary policy. The truth is that there's really not enough data to be completely sure of anything. I think it's relevant to point out that last cycle dominance topped in September of the pre-halving year, which was after rate cuts began. But this time we have not yet had rate cuts, and we just put in a new high on dominance in December. So, I would like to see where dominance goes over the next 2 to 3 weeks. If dominance is unable to take out the prior high at 55%, within the next month or so, then it would be relevant to sort of think about, well, is it going to play out like it normally does in halving years, or is it more dependent on monetary policy? The truth is I don't have the answer to that question. We've been following interest rates for a while and how dominance seems to track it pretty well, especially late cycle. And so far that has panned out, but there's also simply no denying the drop that dominance has had over the last couple of weeks. And I guess the question is, will it hold these lows, right? So you can see these wicks over here. Will it hold those lows just like it did, will it hold these lows right here, just like it did last cycle? And again, this cycle, it would correspond to going back to that bull market support band. So I think that's what that's what at least I'll be watching over the next couple of weeks. I'll also be watching to see if Bitcoin USD, if it can get that engulfing candle above the prior week. And if it does it get this final move into the next month or two just before rate cuts begin? And if it were to play out like that, it would actually be very similar to what happened last cycle. The other thing that we previously mentioned was the short-term bubble risk for Bitcoin, and sort of noting that there's been some pretty consistent levels that it seems to lose steam. One of which over here was back in January, this extension from the 20-week SMA, same thing right here. This is the extension from the 20-week moving average. Same level that it got sort of pushed down right there. But then both of these had another move. This one came in March, and then the extension from the 20-week was lower the following month, even though it went to a higher price. So here it went to the same extension that it did in March and December. And then the question is, of course, is it going to do something like in April or say late December, early January, just like it did back over here, where maybe the extension for the 20-week is less than it was in December, but perhaps it could be at a higher valuation, if that makes sense. So that is what I'm sort of looking at right now with regards to Bitcoin. We've talked about this idea for a long time, but again, there's no way to know if it's a valid theory or not. Like if interest rates start getting cut and Bitcoin is still going higher, then clearly it's deviating from what it did last cycle. If on the other hand it puts in a local top before rate cuts begin, then we could argue, all right, well now it's doing the same thing 2 cycles in a row. There's not enough data, unfortunately. I'm just trying to show you guys the similarities between Bitcoin, interest rates, looking at prior movements by gold, and looking at dominance and saying, look, guys, I've been bullish on dominance for a long time. I recognize that in halving years, at some point in the halving year, this trend tends to change, but it also tends to change with looser monetary policy. It looks like looser monetary policy is coming, but it's not here yet, right? And so, is the market front running this? Potentially, right? So we'll see what happens with the Fed, with the Fed coming into the next couple of months. My guess is that unless the only way they're going to cut in January would be if there's some massive move up in the unemployment rate. Like if the unemployment rate, shoots back up to well over 4% or something in January, then maybe they would cut by late January. But if the unemployment rate comes in, at 3.7 again or something like that, it's hard to imagine that January would be when they would cut. And it would be more likely to be like March or even May. But clearly, March is a pretty good candidate. And I think it makes sense. I think the reason it makes sense that they could cut in March is because if the Fed believes that there's long and variable lags to all these rate hikes, then there's also going to be long and variable lags to rate cuts as well. And so perhaps they want to get ahead of that rather than be getting too far behind the curve again, just like they did with rate hikes a couple of years ago. So that's more or less what I'm looking at with Bitcoin right now. I suppose we could also go look at the logarithmic regression rainbow that we've sort of looked at a few times. Let's go look at that. One of the things we've noted before is that sort of that 2.5 log line rule that we've previously pointed out. I'm not going to go through it just for the sake of time. I know this video is going longer, but 2.5 log lines down puts you at this one right here, which is currently coming in at around just below 48K. So around 48K or so is where that's coming in. And so potentially, and you can see this is where it actually came to back in August 2022 as well. But 48K is where this regression band is currently. Remember, though, that this is a monotonically increasing function. So while it's 48K or just below 48K today, a couple of weeks from now, it could be a little bit above 48K. So it all depends on if and when Bitcoin hits that regression band as to where it ultimately corresponds to. So that's more or less where we are with Bitcoin. The altcoin market has clearly, again, we talked about this a few weeks ago when the altcoin market took out this high over here. I said, all right, guys, this is potentially a shift in the prior trend on Total 3. Total 3 has extended those gains. And because of that, that's the reason why dominance has taken a big hit, is because the altcoin market has pretty aggressively risen here in a relatively short period of time. while Bitcoin has mostly stayed flat above its 20-week moving average. So the way that dominance moves up is if Bitcoin makes a volatile move, especially within the next few weeks. It seems like there's a lot of narratives there, and there's also the Bitcoin halving, of course, as well, that is coming up in April, right? But that's still still a little ways off. But those are the things I think we should look at: rate cuts, how it relates to gold, how it relates to the prior cycles, and just make sure you're managing your risk accordingly. Again, the way I navigate the market is I just DCA in when the risk is low, and I DCA out when the risk is high. So that's all I do. I can give you my opinions as to where Bitcoin price action is going in the short term, but the truth is that it's nearly impossible to predict, and I certainly don't have a great track record of predicting short-term moves in Bitcoin. Okay. If Bitcoin were to fall back down, let's say it doesn't get a bullish candle or an engulfing candle here, and it were to fall back down, then then you have to start looking at these prior highs, right? Can it hold 31K or not? And I mean, I'll be honest. I mean, I do think Bitcoin will have a pullback within the next couple of months or so, but again, it might not come until until mid-January. There's typically some seasonal weakness in mid-January. So that's sort of, I think, when the next big area could sort of open up for a more substantial Bitcoin correction. At this point, I mean, 8 green weeks in a row, 1 red, and now we're potentially looking at another green week. So we'll see where it ends up. Anyways, if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.